But don't get too crazy in your price predictions for this bull market. Galaxy's Alex Thorne writes that this is looking like a longer and more measured Bitcoin cycle than prior cycles. And I tend to agree with Alex. You can see it right here on the chart. And it's not hard to see where Bitcoin is likely going to go in the coming weeks and months when you take a look at the correlation to global M2 money supply. Up and to the right is the name of the game. Just look at these charts. It's very obvious that Bitcoin is sensitive to that global money supply.
Pompliano kicks off by addressing a critical issue affecting traditional investors, bond underperformance. As Sam Callahan notes, a staggering 73% of global bonds are yielding less than the rate of monetary debasement. That's a polite way of saying that most bond investors are actually losing purchasing power in real terms. Pierre Rochard adds fuel to the fire by pointing out that a significant portion of fixed-income investors are underperforming even their benchmarks. In short, the traditional safe investment strategies are no longer delivering.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Now, bond investors, they've not done well on the other hand. Sam Callahan reminds us 73% of bonds in the world are trading at less than the rate of debasement. That ain't good. But speaking of underperformance, Pierre Rochard shows that a very large percentage of fixed income investors, they are failing to outperform their benchmarks as well. And we can't talk about the debasement of the US dollar or the underperformance of benchmarks across finance without mentioning Bitcoin. We're watching Bitcoin's price closely track the global money supply. Quentin Francos says that Bitcoin loves money supply. The more money supply there is, the higher Bitcoin's price goes. So you can see exactly where we're headed now. There will be more money printing, a larger national debt, and liquid assets are going much, much, much higher. Stocks are going to appreciate, gold's going to appreciate in price, and Bitcoin will likely be the biggest winner out of every single asset. We're living through a paradigm shift. Young people want Bitcoin over almost any other asset. You can see it in the capital flows. You can see it in the online chatter. And you can see it also in the financial returns of various assets. Bitcoin is the apex predator of financial markets. It will only stop going up when central banks stop printing money. And I don't think that they're going to do that anytime soon. He writes that the S&P 500 has rallied 20% over the last 41 trading sessions. It's the third best run this century. During the same time period, the NASDAQ 100 has risen 27%. It's the third biggest rally since 2002. Only 2020 and 2008 have seen such sharp recoveries over the last 2 decades. As a result, the S&P and the NASDAQ are now trading just 2% and 1% from their all-time highs. We've gone from a historically weak to a historically strong market just in a matter of days. And this type of historic recovery, it usually suggests that stocks will be significantly higher 1 year from now. Peru Saxena shows that the average return, that's 20% in the next 12 months. That of course happens after the S&P rallies from negative 18 off the 52-week high to negative 3% within 50 days. It's pretty good. This optimism in the stock market, it's not exclusively held by investors though. E.J. Antoni reminds us that consumer confidence comes roaring back in May. It reversed the April plunge and the level is still down significantly from November, but the stock market recovery has given it a considerable boost. He thinks it's interesting that the index has become increasingly tied to equity prices. I think that's interesting as well. So we got a historic rally in public equities, which is driving enthusiasm back into the market, and consumer confidence is finally recovering as well. But another area where we can clearly see the wide-eyed, bushy-tail outlook is in the true global macro asset of Bitcoin. Bitcoin Magazine writes that Bitcoin has stayed above $100,000 for 30 consecutive days. It's the first time ever. Congratulations to all the holders. It's not too bad for an asset that started at fractions of a penny about 15 years ago. But don't get too crazy in your price predictions for this bull market. Galaxy's Alex Thorne writes that this is looking like a longer and more measured Bitcoin cycle than prior cycles. And I tend to agree with Alex. You can see it right here on the chart. And it's not hard to see where Bitcoin is likely going to go in the coming weeks and months when you take a look at the correlation to global M2 money supply. Up and to the right is the name of the game. Just look at these charts. It's very obvious that Bitcoin is sensitive to that global money supply. So here's the thing. All the pessimists from April sounded smart, but most of them didn't make much money as the market rallied in a historic recovery. Too many people think that they can time markets or predict the future and optimize short-term results. Obviously, the people who tend to do the best though, Those are the ones with patience to stay focused on the long term, and they simply hold great assets for as long as possible. It's a simple strategy, but it's very hard to execute.
Wall Street doesn't have any love for anything unless it can make money. So like Wall Street is loyal to money. And so what Bitcoin and the broader crypto industry represents is the ability for them to get new clients, new assets under management, and new revenue. And if you can do those three things for Wall Street, they'll love you until they find, a new mistress to go and find and hang out with. And so I think that's really what you're seeing right now is just like Bitcoin and crypto is this new shiny thing that showed up. They saw the launch of the Bitcoin ETFs. That was really the first big Wall Street product. Grand slam for the BlackRocks, the Fidelities, and Van Ex, et cetera, the incumbents. And now you're starting to see it trickle down. The bankers, they're making a killing. They're raising money for the Bitcoin treasury companies. They're raising money for Circle. They're taking companies public. They're doing M&A. Like they love this stuff. And so anytime you have a new industry with lots of activity is how Wall Street makes money. If there's a lot of turnover in trading, if there's a lot of turnover in fundraising, if there's a lot of turnover in M&A, like that is how Wall Street makes money. They need volume. They need volatility. And there's nothing that has more volume and volatility than Bitcoin and crypto and kind of the surrounding businesses. And so I think that's why, yeah, sure, Wall Street loves them till they don't. But right now, this industry is providing a lot of paychecks to a lot of people across Wall Street. And so until that stops, you're going to see, every single Wall Street executive, they go, oh, yeah, I love Bitcoin. I love crypto. I love this. I love that. But guess what? They also love AI. They also love, all these other industries that are providing this as well. It just happens to be that maybe we're the best at marketing what's going on because of the online kind of engagement of people in the Bitcoin and crypto industry.
Pompliano also takes a moment to recognize some unsung heroes in the space, Cameron and Tyler Winklevoss and their platform Gemini. While Coinbase often gets the spotlight, Gemini has played a crucial role in advocating for regulation, promoting Bitcoin early on, and onboarding users in a compliant, thoughtful way. The Winklevoss twins made a massive early investment in Bitcoin, $11 million back when BTC was under $100, and helped draw mainstream attention to the space.
The investment bankers pricing the stock real low so that their clients get a big pop. Bill Gurley, many other people have been talking this for a long time. There's a very weird incentives. The company obviously wants to raise as much money as possible at the lowest dilution possible. So they want a high valuation, but the bankers and the clients, they want the lowest valuation. So there is some kind of thing there. That's not new. It's not the banker's fault. It's not the investor's fault. It's not the company's fault. It's just that is something that we all know about. Second thing is everyone sees the Circle IPO performance and they're like, oh my God, crypto's hot again. Whoa. Slow down there, fella. Because I actually think that this is more about stable coins being hot, not broader crypto. And if you think about, there's a lot of crypto businesses that would like to be public. If they came public, I don't think that you would get the same reaction that you're getting for Circle. So part of this is stable coins are hot, not all of broader crypto. Will there be other sectors? Of course, but I think stable coins are the big one. On top of that, you have more eyes now looking at, okay, well, how is Circle performing? Man, Tether, which is the other large stablecoin issuer, they must be worth $1 gazillion because they're even bigger. They did $13 billion in profit. So I think we're starting to get some marks from the public market about this industry. It's very good, but I just worry, do not extrapolate out. Circle was good. Here comes the next crypto IPO. It's going to be amazing. And then I think the last thing is when you look at these businesses, one of the things that is happening, which I keep saying over and over again, is everything is converging into finance. So you have exchanges like Robinhood, fast growing segment is crypto. You have Kraken, private crypto exchange that's now going to offer US public equities. That is a convergence of crypto and traditional finance all coming together. You now have Circle, which is using US dollars in this new format of tokenization. You put those together, bam, you've got a successful IPO. And so I just think that everyone is so focused on the traditional world and the crypto world, it's all going to be one big thing. You're not even going to worry about which rails is it on. I just want to know, does it solve a problem? Is it a product or service that people want? If the answer is yes, and it makes money, then people are going to want it from an investor base. I just think that obviously, Coinbase has done a fantastic job as kind of the premier brand in the United States. They have onboarded, I think, over 100 million people as users. They were there in 2012, did a fantastic job of really getting a lot of people into Bitcoin early on. But Cameron and Tyler Winklevoss and Gemini, I think, are kind of like unsung heroes as part of this story as well. They have consistently said, there needs to be regulation, there needs to be rules. They really spend a lot of time doing that. And I think that Cameron and Tyler, in a very unique way, they drove a lot of interest in Bitcoin. kind of indirectly. You know, people forget that like outside of the crypto world, Cameron and Tyler are very well known. The Social Network movie, right? Kind of that whole story. And so their early bet on Bitcoin, they bought $11 million of Bitcoin at a very low cost. It's worth billions of dollars today. Probably one of the best investments that people have had in a long time. But I do think that they were able to pull a lot of like people who wouldn't have been interested in Bitcoin. Hey, why are these guys interested in this thing? What's going on here? And then obviously they have Gemini, and they're now launching things like the Gemini credit card and stuff like that. So I just think that Gemini usually is not included in the conversation with the Coinbases, the Binances, whatever. But I think they're a very important part of the ecosystem. I think they've been a great player. We've worked with them for a long time across a variety of different things, events we've done, or you know, podcasts, stuff like that. But I do think that it's kind of like these people genuinely believe in the industry. They believe in the assets. They're trying to figure out what are the products and services that users want. And so I want to see anyone in the industry who does those things be successful. And so far, it seems like Gemini, you know, they're going to do this IPO. I'd love to see them have, you know, the same result as Circle.
One of the final takeaways from Pompliano's video is a return to fundamentals. The best investors are not those who try to time the market or make complex predictions. They're the ones with patience. Holding high-quality assets over long periods of time is a simple yet incredibly effective strategy. In a world driven by noise, volatility, and short-term thinking, the ability to stay disciplined is a rare superpower. Bitcoin rewards those with a long-term view, and Pompliano encourages investors to tune out the noise and focus on fundamentals. Please like and subscribe.